Hi, my name is Kevin Retcher, owner of First Meridian Mortgage. Today, the question of the day was, what are the closing costs on a $750,000 purchase in Northern Virginia with 20% down? So I don't have those numbers off the top of my head. I told the young lady, hey, let's get into it. Let's actually do the numbers. And so I'm going to go through those with you just like I did with her. And I'm going to go through some additional potential numbers that you might see with other lenders, okay? So here, anything with the 1 cent on there are things that I'm not charging on this particular deal, but I wanted to have them show up so I could talk about it, okay? So lenders themselves typically will charge an origination fee, okay? A 1% origination fee is equal to 1% of your loan amount. So on this particular case, a $600,000 purchase price would be 1% of that would be $6,000 if they were charging an origination fee. Okay. If they're a lender, a lot of times they will also potentially have a processing fee. And I don't have a processing fee. I never have charged one in my 28 years. Next is an admin fee. Admin can be also an underwriting fee, all right? So on average, they are about $750 to $1,200 with most lenders. And in some cases, if you have someone that says, I don't have any lender fees, you want to really look at the interest rate. So the fact of the matter is, we can check a box and waive that fee, but it would raise the interest rate or change the pricing on the loan accordingly, okay, dollar for dollar. So it might change the interest rate ever so slightly or the actual cost on the loan ever so slightly. And so you want to do that math, right? So if you think you're refining in a certain period of time, you can say, well, if you waive the underwriting fee or admin fee, how would that affect my loan, and how long would it take for me to recoup that money? So in some instances, I tell people you're better off to take a higher interest rate than to pay an underwriting fee. And it just depends on the individual situation and how long you think you're going to have a particular loan. Next is loan discount fee. Similar to the loan origination fee, but a loan discount actually buys down your interest rate. So those are the points that actually you're prepaying that interest so that you have a lower interest rate over a 30-year period of time. If you think you're refinancing anytime soon, probably a waste of money, okay? Same for the loan origination fee. Appraisal fee, self-explanatory, but kind of exciting. Fannie Freddie just announced that they're going to start allowing some waivers all the way up to 90% on some of the purchases. The algorithm will spit out a appraisal waiver at 90 now instead of just at 80. So here's the thing. You want to talk to your loan officer and your real estate agent to make sure that it makes sense. If you have an appraisal contingency, that could, if it came in low, open up the negotiations for a lower purchase price. If you take the waiver, you're just saying, I'm good with what I'm paying and saving the $540 and moving it down the road. So you might want to weigh those options, okay? Next is credit report fees, kind of self-explanatory. Cost on credit report fees are getting a little bit ridiculous. It used to be as low as $36 about 3 years ago. There is $74 now, and they're supposed to be going over $100 here shortly. So definitely increasing. Keep in mind you can never be charged more than what the actual report cost, okay? Key tip there. Tax service fee, that is a fee where a service actually monitors that the tax bills have gotten paid, let them know how much they are, make sure that they're been paid so they don't go to auction on the courthouse and a bank loses its collateral. So that's actually important. Flood cert fee, Army Corps of Engineers, do flood maps every year. If a house has shifted into being in a flood zone for a particular reason or another, the lender gets notified, and then you're going to get notified saying, hey, Mr. Homeowner, you need to get flood insurance. So that does protect you just in case. The next one, work number. Work number is an interesting one, just FYI. Your HR departments at your companies don't like taking phone calls from mortgage people saying, hey, what does Susie make and when did she start employment and whatnot. So what's happened is someone created a service, and now those employers will upload the data to the service, and the employer says, I no longer have to take the phone calls, call the service. Service, then we call them to get your employment information, and they say there's a fee. That fee is actually going up to $230 at the beginning of the year. Typically, it's about $150 right now. If your employer will do verbal verifications, typically that fee would be removed and not be required, okay? Here, we're going to get into some down and dirty about title companies, okay? So a couple things I want to discuss here. Pay attention to this section, okay? People will spend a lot of time searching for mortgage rates, and there may or may not be large differences in some instances, but they don't spend any time going over the title costs, okay? They typically will use whichever title company the real estate agent is going to recommend, okay? I personally would say ask your loan officer who they recommend, because they're probably more cost conscious and probably don't have a marketing service agreement like a lot of the real estate companies do. A lot of the real estate companies, the realtors, can get paid by having a shell company that's originated, and they get a portion of the title insurance when you actually purchase it at the closing, okay? So I'm not a fan of this in any way, and I don't have any title company MSAs whatsoever. So what I'm telling you is how to save money. I don't care whether they have an MSA or not. What I care about is getting a good deal. So the company I used in this estimate is Republic Title in Annandale. They have a settlement fee of $495, okay? And then they charge an ICL fee and a recording service fee. Those are their junk fees. Other places, mind you that the $495 is cheaper than most. I'm going to give you a range. $495 to $1,200 is the average closing cost, okay, for a settlement. Now, a lot of them will have binder fees, title search fees, courier fees, doc prep fees, notary fees, a lot of other fees in conjunction on top of the settlement fee, okay? Republic Title does not do that, right? The next fee that you'll see on there is the lender's title insurance. This is going to get exciting over the next few years. Lender's title insurance is one of the most expensive items that is required. Fannie Freddie may start, at least there's a pilot in four other states. Just like we can get an appraisal waiver, we might be able to get a title waiver soon. Now, it's not available in Virginia, DC, or Maryland right now, okay? But sooner or later, I expect it to get rolled out. And when we run your file through the automated underwriting engine, if it gets us a waiver, there's going to be a small fee that you are going to pay, but it's not going to be nearly the cost of the lender's title insurance, okay? So that's going to be exciting. But here's the pro tip, right? When it comes to the agent recommending XYZ settlement company or attorney, ask them why they're recommending them. Ask them if they know if they'll price match. Ask them if they have any MSAs with them. And then in general, go to the website and see if they have a quoting engine. Print off the quote. If they don't, call them up and say, hey, I'd like you to give me a closing cost estimate with your fees and recordation fees, okay? They're gonna do that without a problem. Then just Google other title companies and go on their calculators and print off the exact same thing, $750,000 purchase, $600,000 loan amount, and get their fees. Find the one that has the best fees. Go back to the realtor's recommended settlement company and say, will you match these fees? 9 out of 10 times, probably 99 out of 100, they're gonna do it, okay? So now you've made the realtor happy because they're still using who they're used to using, and 2, you've gotten the best price, okay? That exercise will save you anywhere from $500 to $1,200, I promise, okay? Next, you're gonna have the recordation fees for the deed and the mortgage at the courthouse. That is done by pages, so that will change ever so slightly based upon your jurisdiction. Then you have the city and state recordation, $3.34 per thousand in Virginia. $2.50 goes to the state, 83.334 goes to the city. Okay, you can't get around those whatsoever. Then you have the optional owner's title insurance policy. If the lender requires them to be protected by and get a policy, I would personally want owner's coverage myself, right? It's a one-time fee. Some people don't buy it, but true fact, I heard Abe Lincoln lost a couple homes because he didn't have it. So I personally would get it, okay? Next is pest inspection. Typically range between 50 and 150. Home warranty, home inspection, radon, and then survey. Survey is not required unless the title company takes exception to the survey for some reason. Then you would need a survey so that they would not take exception to the actual title work of the survey. So that's the actual closing cost, $13,068 on a $750,000 purchase price in Virginia, a $600,000 loan amount. Next section we're going to get into is prepaid items. Prepaid items aren't closing costs, but they are cash flow, right? So you have interest to the end of the month, so the days that you've owned the house, so in this particular estimate, closed on the 12th, and we had 17 days to the end of the month, so that you get on cycle. So it's the only time you ever prepay your interest on a mortgage, right? So you prepay it at the end of the month, you get to live in the property for 30 days, and then you make your first payment. So, and then you have a 15-day grace period on the back end of that. So in theory, if you close at the middle of the month, you're actually going to go almost 60 days before you actually have to make that first payment. But make it earlier. You don't have to go all the way to 60 days. So next line item is the 1-year homeowner's insurance policy. So you're required to, because policies are annual on a homeowner's policy, to pay for a whole year in advance. You can either pay for it up front out of your pocket, or get a binder and a bill and pay it at closing. Most people just pay it at closing, okay? The next line item is startup of the escrow account for your taxes and your insurance to be paid in the future, okay? So how that gets paid for is in your monthly payment. Over here, you're gonna make 1/12 of your payment every single month, and 1/12 of the insurance and the taxes are gonna go into this account. Plain and simple, right? So what happens is they're allowed a 2-month cushion in this escrow account, all right? And it gets monitored because in the old days, they used to collect that money and make money on their money, right? So now it's all being done under the same exact computerized program the government requires the banks to use, okay? So let's think about it. They're allowed a 2-month cushion. A year from now, a 12-month policy has to be paid, right? So you take 12 months plus 2 months, and that's 14 months that you need, okay? So if you close at the beginning of the month, prepaid at the end of the month, don't make your first payment till the following month, you're only going to make 11 payments before that next bill's due. So if you take 14 from and minus 11, that's why you start up with 3 months. Similar on the tax bill. Tax bill is 6 months paid, twice a year, plus a 2-month cushion. So in the month that they're due, they're allowed 8 months in the escrow account, essentially. So in this particular case, you would make 4 payments before the bill is due. So 4 from 8 is 4. Okay, so that's why you would start up this escrow account. And I consider this like a savings account. It's your money. If you paid the loan off, you would get what's in this account back. Okay, so here you have $13,068. Here you have $63,076. Those line items are then brought over, and I'm going to make this a little bit easier to be seen. Here, let's go through this. So here we have the purchase price of $750, right? And then you've got the cost and your prepaids over here that go into box F, which is the closing cost and prepaid. So it's $19,444.68. Those get added up to be $769,444.65 minus your loan amount, minus any credits here. If you get any realtor credits, any earnest money, any closing cost credits, any other any grants from any institutions would all be in this section, and then you would have what you would need at closing, which in this case would be $169,444. So the other reason I like to use this form is it then also has the proposed payments. So in this particular case, the principal and interest would be $35.96.92, 1/12 of the hazard, 1/12 of the taxes, and then an HOA. So total housing in this particular situation is $47.46.92 would be their payment. So I like to use this form. I feel it's better to at least go through line by line on an individual closing cost worksheet. Okay, so again, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage. I'm licensed in Virginia, Maryland, D.C. I also have vetted mortgage brokers in 32 other states that I do business with that I can refer you to. I get nothing other than knowing that I have a good contact in those states for you. So if you're PCSing or relocating to California or Oregon or Michigan, I've got loan officers that are broker owners just like me that I have personally vetted that can help you in those states also. Keep in mind a few things. Recordation and recordation taxes change in every state and in different jurisdictions. So those title companies have calculators that you can use. So if you use those calculators, keep in mind us loan officers really only have control over a few of these items, really these top 5 items. The rest of these are all jurisdictional, and we have no control over those. your agent helps you choose those services and who those vendors may or may not be. I'm only telling you, you can do most of that work yourself by just jumping on a computer and going to a few title companies, quoting engines, and be more educated of exactly what those closing costs are for both your purchase price and loan amount. That's the only two things you really need to know to get 90% of those actual closing costs in this section, okay? Your prepaids will be dictated by when you close and the amounts of your insurance and your taxes. And then those all get brought over to the right and are just part of the equation. So closing costs in this particular scenario are really less than 2% of the purchase price, but you need closer to 3% with the escrows and then also the down payment. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. It's a pleasure to serve you. To all the Marines out there, I say Semper Fi. I'll talk to you soon. So if you stayed with me this long, the next question that my client asked was, what's the difference between closing cost on a purchase and closing cost on a refi? So you know what we're going to do? We're going to get into it. Let's go.